Okay, let's be honest. Does tax season feel like this giant, stressful chore every single year? Well, what if we could flip that script? What if it was actually an opportunity? Today, we're going to dive into 10 powerful tax strategies made just for self-employed pros like you to help you keep more of your hard-earned money right where it belongs, in your pocket.
So, I want you to ask yourself this question honestly. Are you letting your hard-earned money just slip through the cracks of the tax code? I mean, are you sure you're not overpaying? For a lot of us, the answer is kind of a nervous, I don't know. Well, the strategies we're about to cover, they are the key to changing that answer to a very confident, nope, not me.
All right, so first up, let's talk about your daily operations. We're going to look at how to turn your everyday environment, the very places you work and the tools you use, into some serious tax-saving assets.
Okay, the home office deduction. This one is huge, but it all comes down to one single golden rule. The space has to be used exclusively for your business. That one word, exclusively, is everything. It's the key that unlocks the whole thing. So, your dining room table where you also have dinner with the family? Sorry, that doesn't count. It has to be a dedicated area. No ifs, ands, or buts. And you know what? Figuring out the deduction is actually way simpler than it sounds. You literally just do 3 things. 1, measure your dedicated office space. 2, measure your home's total square footage. And 3, divide the office by the total. Boom, you've got your magic percentage. So let's say your office is 17% of your home. Well, that's the number you're going to use.
And here's where that magic number gets really powerful. You get to apply that percentage to a whole bunch of your household bills. We're talking utilities like gas and electric, your home insurance, your phone and internet bills, even the depreciation on big improvements to your home. Believe me, this can add up to some serious savings fast.
Now, a deduction this good is the perfect time to bring in what I like to call the CPA caveat. This is your secret weapon, your tax professional. Think of them as your strategic co-pilot. Look, tax laws can get tricky, and everyone's situation is different. Running this by a pro just makes sure you're getting every penny you deserve and you're doing it all by the book.
All right, next up, your car. When it comes to deductions, you've basically got 2 paths to choose from. First, there's the standard mileage method. Super simple. You just track your business miles and multiply by whatever the IRS rate is for the year. Easy. Then, there's the actual expense method. Yeah, it's more work. You're tracking everything from gas and insurance to maintenance. But, wow, it can often lead to a way bigger deduction, especially if you have a newer car. Okay, lean in for this one, because here's a little-known catch that is a total game changer. Driving from your house to your main office? The IRS usually says that's just a personal commute, not deductible. But what if you make a quick business stop first? Maybe you drop off some flyers or grab coffee with a client. Now, suddenly, the entire trip can become deductible. That one little stop can literally turn a non-deductible trip into a fully deductible one. How cool is that? So how do you track all this? Well, you've got options. You can go old school with a physical logbook in your glove box, or you can use an app like MileIQ or Everlance that does the heavy lifting for you. The most important thing, though, no matter what method you use, is to always write down the business purpose of the trip. The IRS wants to know the why behind every mile. All right, let's shift gears and talk about growth. Because what if I told you that investing in your business to make it bigger and better could also save you a ton of money on your taxes right now? Let's get into it. Think about all the money you spend on marketing and branding. That branded swag you give to clients, those Facebook ad campaigns, the professional headshots you got, every single dollar is a straight-up deduction. That's why you've got to track every little thing, because all those small expenses, they add up to one massive write-off at the end of the year.
Here's a great pro tip, especially for when you get to the end of the year. If it looks like you're going to have a pretty high tax bill, December is the perfect time to buy that new equipment you've been eyeing. That new computer, that fancy camera, maybe even a drone. Buying it in December means you get to claim that deduction for the current tax year. It's smart planning.
And hey, don't forget that investing in yourself is a business deduction too. We're talking about your license renewals, any continuing education classes you take, those big industry conferences, and yeah, that includes the travel and hotel costs to get there. It's basically the tax code giving you a thumbs up for staying on top of your game.
Okay, we've been talking about specific expenses, but now it's time to zoom out and look at the big picture. These next few strategies are about the major financial moves you can make, the ones that really shape your long-term financial health.
So for retirement, if you're self-employed, you've got 2 fantastic options, the SEP IRA and the solo 401k.
Both let you sock away a serious amount of money for the future. We're talking up to $70,000 for 2025. The SEP IRA is usually simpler to set up. The solo 401k, though, often gives you a bit more flexibility, like bigger catch-up contributions if you're over 50, and even Roth options.
And you guessed it, here's another CPA caveat. Because choosing a retirement plan is one of the biggest financial decisions you'll make, this is exactly where you want to have a deep conversation with your tax pro. They can help you figure out which plan makes the most sense for your income, your goals, and your future. It's a choice you really want to get right.
Okay, this next one is a biggie, so don't mess it. As a self-employed professional, you could deduct, wait for it, 100% of your health, dental, and even qualified long-term care insurance premiums. For you, your spouse, your dependents, and the best part? This is an above-the-line deduction, which means you can take it even if you take the standard deduction. It's a huge benefit.
All right, to really drive this next point home, I want to share a quick story from the source material. It's a perfect example of why having the right business structure isn't just about saving on taxes, it's about protecting yourself from a whole lot of headaches.
So get this, the author was doing everything by the book, taking all the right deductions, but still got hit with four major IRS audits in just 7 years. Can you imagine the stress? So what changed? In 2007, they formed an LLC. And just like that, the audit stopped. Gone. It just goes to show you, having a formal business structure like an LLC or an S-Corp sends a signal to the IRS. It says, hey, this is a serious business, and it creates this clean line between your personal and business money, which helps get rid of those potential red flags.
Okay, let's start to bring this all home. Because at the end of the day, the real secret to financial control isn't just memorizing a list of deductions. The ultimate strategy is having a proactive tax plan.
So what is proactive tax planning? It means you're not waiting until April to frantically stuff receipts in a shoebox. It's an ongoing thing. It's tracking your expenses all year, it's strategizing your finances, and it's talking with your professionals throughout the year. When you do that, tax season stops being a surprise and starts being just another manageable part of your business. And for our last tip, here's a fun one. I like to call it the meta deduction. The money you spend to get help with your business and your taxes, yeah, that's deductible too. So, the fees you pay your CPA, the tax software you buy, the bookkeeping apps, even a virtual assistant, you can write all of that off. How great is that?
I want to leave you with this quote from a source because it really hits the nail on the head. Every strategy you're not using is costing you real money. And that's so true. This isn't just about playing with numbers. It's about money that can make a real difference in the quality of your business and your personal life.
So there you have it. You've got the blueprint now. The only question left is, which one of these strategies are you going to put into action first?